Good evening and welcome to the ShadowTrader Video Weekly for Sunday, October 14th, 2012. Lots to go over in this week's video. I'm going to be talking about the trend channel break, as you can see in the S&P right in front of you, also where the Dow, NASDAQ Composite, NDX are in relation to their support and resistance channels. Going to check out the profile and also an update on the 4 trade ideas that I gave you last week, along with a new idea that I'm working for this coming week. All right, so let's get right into it. S&P has just started to break the trend channel and the 50 MA. That is the red line here. I'll just trace it for you. It's kind of hidden by the trend line right there. And you can see that Friday's action put us just below the lower end of the channel. Not really a full-on break, so I can't really, we closed just a hair below it, not really a full-on break. If we look at the other majors, right, they look kind of different, which is really interesting. Like going to the Dow, I believe there is more downside for the Dow, but what's interesting about it is that we have moved only to the top side of the trend channel, right in here, and have kind of parked ourselves right under it. And right now the prior highs in the Dow are what's supporting it. So this also could be a tipping point for the Dow as well. Notice that it also is sitting right on its 50. So these next couple of days are going to be interesting. In my blog I was writing saying that Thursday and Friday really were going to be pivotal for the markets as far as what's going to happen into the end of the year. Really, I need a couple more days, to be honest with you, because interestingly enough, I thought that the action on Friday would be much more bearish. I thought that we would break down harder through the trend channel since we had already tested those areas in the S&P in prior days. We'd kind of come in and then, short-term traders were covering, and you'd float back down, scoot up a bit, cover, and we did close relatively close to the lows on Friday, but again, no major penetration of the trend line. Keeping it going with like NASDAQ Composite and NDX, same exact situation, except that on the NASDAQ, you can see here we've plunged deeper into the middle of the channel as opposed to the Dow, right? Dow is sitting right about here. NASDAQ is inside. NASDAQ basically also being under the 50 here, I think should probably be in free fall, for lack of a better word, or has more of a clear shot to the low end of its trend channel. So I think that with the push here from the middle of the channel down to the bottom of the channel, that will also pull the S&P along with it, and also the Dow. It'll give it, because there's a question of relative strength, relative weakness. If one is more bearish or one has more room to maneuver, it can sort of push-pull on the other one. Finishing it up with NDX. Let's just get here. Similar situation, right, where you have NDX coming into the middle of the channel with a little bit of room to go till it gets to the bottom channel. So here's what I want you guys to look for next week. If the S&P starts to break the trend line, you have to watch these two markets, the NASDAQ 100 and the NASDAQ Comp, and watch for them to come down to their respective low ends of the channel. And that could put the brakes on any S&P selling. A lot of times what people don't realize is how the markets are interconnected, and they see a break in just one market, but they don't realize that the other market might still be above a support level. And then what happens is one market breaks, then the other one comes in, but you're only trading the first market. The first market reverses out of nowhere, shoots back up to the upside, and you're left scratching your head. But you didn't realize, oh, well, I was shorting the SPY, but the Qs were still, whatever, say 20 cents above their, support line. Let's say, I'm using a day trading example, but this all works in a larger time frame. And then, the S&P shoots back up and the out of nowhere, and you're kind of, like I said, left scratching your head. So keep that in mind. So I'm going to be watching these trend channels in the NDX and NASDAQ Composite into the coming week. No discussion of where the S&P is headed would be complete without talking about Apple. So I want you to pay attention to this. This is very interesting how Apple had a bounce off of a trend line and is now stopped right back at that trend line. Had a kind of a weak bounce in here, and then bearish day on Thursday, and then stopped right at it there. So if this comes down more to here, which is another trend line, then this also could be sort of fuel that brings the markets lower. Markets have been keying a little bit off Apple, I would say, in the last couple of months, so I'm going to be watching this as well into the coming week. All right, last week I gave you guys 4 trade ideas. Some have triggered, some have not happened because the charts never came into play at all. Let's look at crude first. CL, I was telling you I'm very interested in buying crude at the 61.8 retracement of this move. That did not happen. Looks to me now that crude is making a inverted head and shoulders right in here, which I believe it did. Right, here's your left shoulder, here's the head, and here's the right shoulder that's building up. So if you see crude holding well above 90 in the coming week, I would say it's probably going higher. If a daily bar closes down in here below 90, negates this pattern, possibly with a trend line break like this, then we're probably coming into my target area here, and I would be looking to buy crude futures for a bounce at the 61.8 retracement. All right. Next item up for bids is the soybeans, which is /ZS. Now this one's interesting in that I think I am going to be able to get an entry off here. I marked off the same 61.8 retracement as I did in crude, and beans had a pretty strong bounce right in here, as you can see. And this is just an alert I set at 15:05. If it goes lower, I want to know because I want to be in here at the trend line. Beans, I think, are the more interesting trade here, even more so than crude, I would say, because not only is the 61.8 there, but you're tying in with a trend line, which is nice. And that's right here, just below, pretty much right at 1500 actually. The trend line has moved up. It was below before. Obviously, as time goes on this way, trend lines move up this way. So we're looking right around at the 1500 level. Also, note the area that it happened in, not only the 61.8, but it's a prior high as well. So you've really got 3 key technical events happening at the same time. Pull back to a prior high, 61.8 retracement, and long-term trend line support. So I'm going to be watching beans for a trade this week. All right, Apple. Apple last week, I told you that I was in a trade, which was not a very large trade, but it was a solid trade, and it worked out really well. And I was talking about being in a ratio spread 1/2 of 625, 615 weekly puts. And a lot of people email me, and they don't understand the setup of the trade, and they say, well, how can it be that you put it on for a credit and then you take it off for a credit as well? Okay, so here's the trade history of those trades, and this was all put out in real time on Twitter. I was saying that I was selling this back spread in a 1/2 ratio for a 60-cent credit. It actually went off at 57 cents. And again, not a very big trade. It was like five lot altogether. I really wanted to add to it, but I got involved in some other stuff, and I just wanted to show you for how this works, because I get all these emails always saying, how can it be that it's it's in for a credit and out for a credit? But it's actually really simple, because remember that as the week progresses on and you get closer and closer to Friday, right, the time value is all crunching to the middle. So if you're long 1, which is the closer one, and you're short 2 times that, which is further away, even if the stock goes nowhere, the price of the spread is probably going to move in a more in advantage to you, right? It's going to work out for you because the further out options that you're short 2 of are going to decay further. Now, in my case, what I do with these spreads is I try to put them on in an area in the chart where I believe that there is support. So I was watching this trend line here, and I didn't think that we would break it. And so, therefore, I figured Apple's probably going to come either right to it or stop somewhere above it. So I was using the 625, 615 strikes as as the trade. So long 625 for each one long 625, short 2 615s. And as I was just showing you, this is something that is put on for a credit, and then again taken off for a credit. And these here, I actually took off prematurely, these ones that were taken off for 20 and 10 cents, because I saw here the stock was bouncing pretty hard, and I thought, okay, I'd rather get some credit rather than 0. But remember, even if it went to 0, right? It doesn't matter because I started with a credit. So 0 would be just fine, but I wanted to actually get something on the sale. And then the last one was actually a pretty good exit. Notice it was a 91-cent credit. And the highest I saw it on the screen was like $1.67 as the stock was trading closer and closer to the 625 level, which was later in the week, right? You can see here the low on Friday was 625.3. So the top option was almost in the money, and because the options were expiring that day, being Friday, remember that the 615s were worth almost nothing, but being at the 625, they had some value. So I saw it at like $1.67, right? So one of the things I want you to take away from this trade is that it's a relatively easy trade to pull off, and that's why I like to tweet these trades. Those of you that follow me on Twitter, you know that I talked about this trade live. I posted the exits like as they were happening. I said, you know, I'm buying the spread. I'm out here. I'm out here. Here's what it's trading for now. Here's what it's trading for now. You don't have to do a lot of monitoring in it. The only danger that really occurs with the 1x2 is if price moves really hard and fast in the direction, meaning in this case down because I'm using puts, early on in the cycle, meaning I put the trade on a Friday or a Monday, and then like immediately that day, the stock plunges down to where the first strike is. Okay, at that point, of course, it's going to trade for a relatively large debit for you to take it off, because even those 615s are going to have a whole bunch of value. And remember, you're short 2 and long 1. But if the stock just moves towards your support level in a normal manner, then you're usually going to be okay. And if towards the end of the week you can get closer and closer to that support level or even go through it, you have a shot at taking the trade off for a pretty large credit. All right? So that's Apple. Apple worked out okay. Next trade is VNO. VNO ended up being a scratch for me, and I want to show you guys why I ended up taking the trade off. VNO was a bounce play, buying at support, and I believe my basis was somewhere around 79 altogether. What I was looking at was I had one entry in here, and these price levels that I marked off are not the exact entries, I don't believe, but I just marked them off as like these lows here. I had an entry somewhere in here, and then another entry very close to this low in here, somewhere like right in here, just under the 79. And then I took the trade off Friday for like pretty much break even. It might have been like a 10 or 20 cent loss. And the reason being that I noticed that even though this is such a strong support area in VNO, right? I showed you the weeklies last week. I don't feel that the stock is acting right, in that if you look at how the bounce played out prior times, you had a much bigger thrust right away when you came in. Right in here you came down, you had one day that was an inside bar, and then you had a follow-through day. Right, we had a big emotion to the upside. Here you had the follow-through day immediately, turn around. Here you had the bounce, and look, the next day, again, expansion to the upside. Not as big of a candle here, but still, pretty strong expansion to the upside. Here, coming into the end of this week, we didn't really have that at all. Here I was a buyer, but look, it's just red candle, and then you gap up and fail, red candle. Here you had a little bit of a spike up, move up, and not only failure, but then a close below the lower support level. So I think I did the right thing. So this one turned out to be a scratch. I think it was just time to go. All right. Last thing I want to show you is a setup here in Priceline for next week. All right. Here's a similar situation for the 1x2, just like the Apple, where you have a strong support level. And my play is that I think the stock is going to come into the support level relatively slowly and hold there. All right. Priceline doesn't report until November, I believe, so I'm pretty sure I'm okay on that for the coming week. And this is a setup that I call filling up the triangle. And here is, this area here obviously is the base. You have your hypotenuse, and what I mean by filling it up is that once you break trend here, my theory is always that stocks will follow down to the bottom of the triangle and fill up this void area. There's strong support here. We know that we bounced pretty hard here, filled an entire gap from there. So I think coming down to this area is going to support. So it's the same thing like in Apple, but in this case it's going to be +1, 560, and -2, 550. And these are puts on the weekly, which expire next Friday. All right? That is the setup there. I believe there were about 40 cents credit towards the end of last week. I have a couple on right now, and I'll probably put on more. If we look at price line right here, what is it now? Not that one. 37-cent credit. It's right in here. So it's these two strikes here on the weeklies. Right? Long 560, short 550. And there's your entry right there. All right? We'll see how that works out into the coming week. All right, that's all I have for you guys for today. Hope you enjoyed it. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.